consider 4 different stocks, all of which have a required return of 13% and a most recent dividend of $3.75 per share. The stock W, X and Y are expected to maintain a constant growth rate in dividends for the foreseeable future of 10%, 0% and -5% per year respectively. Stock C is a growth stock that will increase its dividend by 20% for the next 2 years and then maintain a constant 5% growth rate thereafter. What is the dividend yield for each of these 4 stocks? What is the expected capital gain yield? Discuss the relationship among the various returns that you find for each of these stocks. We have to figure out the dividend yield and the capital gain yield for each stock. All of the stocks have a required return of 12%, which is the sum of the dividend yields and the capital gain yields. To figure out what each part of the total return is, we need to know how much each stock is worth. We can figure out the dividend yield and this stock price and dividends. Total return minus dividend yield is the capital gain yield for the stock. So for stock W, P0 is equal to D0 into 1 plus G divided by K minus G, and dividend is 3.75 into 1.1, that is 10% growth, divided by 0.12 minus 0.10, and the answer is 206.25. and to calculate the dividend yield is equal to D1 divided by P0. D1 is equal to 3.75 into 1.1 divided by 206.25, that is equal to 0.02 or 2%. And capital gain yield is equal to 0.12, that is total return minus dividend yield, that is 0.02. It means 10% will be capital gain yield for W stock. For X stock, price is equal to 3.75, that is D0 into 1.0, that is growth rate is 0, divided by 0.12 minus 0.0, and the answer is 31.25, and dividend yield is equal to 3.75, that will be D1 divided by P0, that is 31.25, equal to 0.12 or 12%, and capital gain yield is equal to 0.12 minus 0.12, that is 0%. For stock Y, price is equal to 3.75 into 0.95, as 1 plus growth is 0.95, as the growth rate is -5%, divided by 0.12 plus 0.05, that is 20.96, and dividend yield is equal to 3.75 into 0.95 divided by 20.96, and the answer is 0.17 or 17%. And capital gain yield is equal to 0.12 minus 0.17, that is minus 0.05 or -5%. For Z stock, we have multiple growth rates, so we have years, dividends and their present value. Year 1, the growth rate is 20%, so dividend is 3.75 into 1.2, that is equal to 4.5, and next second year 4.5 will be current dividend and 1.2, that is the growth rate, and the dividend will be 5.4. in third year 5.4 will be current dividend and 5% constant growth, that is 5.67. and if we calculate the present value, 4.5 divided by 1.12, as the 12% is the growth rate, 1, that is equal to 4.02. second year 5.4 divided by 1.12 raised to power 2, and the answer is 4.30. For the third year, 5.67 divided by 0.12 minus 0.05, and the whole divided by 1.12 raised to power 2, and the answer is 64.57, and price will be the sum of all these return, that is 72.90. In all of these situations, the required return is 12%, but the return is split between current income and capital gain in different way. High growth stocks have a big part of capital gains, but they do not pay out much in the current income. On the other hand, mature stocks with negative growth pays out a lot of current income, but their prices go down over time.